The global economy is constantly evolving, and the financial landscape is never stable. While many economies have rebounded from the recession of 2008, it is clear that we are not out of the woods yet. Many experts are predicting a financial disaster in the upcoming years, which could have a devastating impact on the world economy. In this video, we will examine the reasons why a financial disaster is likely to occur, particularly in the United States, and the steps that can be taken to mitigate its impact. So in this video, we are going to discuss the truth about financial disaster in the upcoming years. Wake up, America. The video is going to be amazing. Make sure to stick till the end. Now, before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Reasons for financial disaster. High levels of debt. The high levels of debt that exist in many countries. In the United States, for example, the national debt is currently over $28 trillion, which is equivalent to over 130% of the country's GDP. This means that the United States is heavily indebted and will find it difficult to pay off its debt obligations. Economic inequality. Another reason for a financial disaster is the growing economic inequality that exists in many countries, including the United States. The rich are getting richer while the poor are getting poorer, and this creates a situation where the majority of the population is struggling to make ends meet. This can lead to social unrest and economic instability. Low interest rates. Low interest rates are another reason why a financial disaster is likely to occur. Central banks around the world have lowered interest rates to stimulate economic growth, but this has led to a situation where many investors are taking on too much risk in search of higher returns. This can lead to a bubble in certain asset classes, which could burst and cause a financial crisis. Cybersecurity threats. In the digital age, cybersecurity threats are becoming more common, and this could have a devastating impact on the financial system. A cyber attack could disrupt the functioning of financial institutions, leading to a loss of confidence in the system and a panic among investors. Geopolitical risks. Geopolitical risks, such as trade wars, conflicts, and political instability, can also lead to a financial disaster. These risks can cause a loss of confidence in the global economy and lead to a flight of capital from certain regions, which can cause economic instability. Steps to mitigate the impact of financial disaster. Increase regulation. One of the most important steps that can be taken to mitigate the impact of a financial disaster is to increase regulation. This can be done by introducing stricter rules for financial institutions and by creating more oversight mechanisms to monitor their activities. This will help to prevent risky behavior and reduce the likelihood of a financial crisis. Reduce debt levels. Reducing debt levels is another important step that can be taken to mitigate the impact of a financial disaster. Governments can reduce their debt levels by implementing austerity measures, reducing government spending, and increasing taxes. This will help to improve the country's fiscal position and make it easier to pay off debt obligations. Increase economic growth. Increasing economic growth is another important step that can be taken to mitigate the impact of a financial disaster. This can be done by implementing policies that encourage investment, job creation, and innovation. This will help to stimulate the economy and reduce the likelihood of a financial crisis. Increase cybersecurity measures. To mitigate the impact of a cyber attack, it is important to increase cybersecurity measures. Financial institutions should implement robust security protocols and invest in cybersecurity technologies to protect their systems from cyber threats. This will help to prevent a cyber attack from causing a financial disaster. Address economic inequality. Addressing economic inequality is another important step that can be taken to mitigate the impact of a financial disaster. Governments can implement policies that reduce income inequality, such as increasing the minimum wage, providing affordable housing, and expanding social welfare programs. The global economy has been in a state of flux since the financial crisis of 2008. Many nations have been trying to stabilize their economies, and some have been more successful than others. However, despite the efforts of governments, the outlook for the next few years looks bleak. In this video, we will discuss the truth about the financial disaster that is likely to hit the United States in the upcoming years. The current economic situation. The United States economy has been growing steadily since the recession of 2008, but it has not been without its challenges. There are several factors that are currently causing concern, and they are all interconnected. These include rising national debt. The national debt of the United States has been increasing at an alarming rate. According to the U.S. National Debt Clock, as of February 2023, the national debt stood at over $30 trillion. This represents a significant increase from just a few years ago, when it was around $20 trillion. Inflation. Inflation has been on the rise in recent years, with the Consumer Price Index, CPI, increasing by over 6% in 2022. The rising cost of goods and services has put a strain on households and businesses, and it is likely to continue to rise in the coming years. Trade deficit. The United States has been running a trade deficit for many years, which means that it imports more goods and services than it exports. This has resulted in a significant drain on the U.S. economy and has contributed to the national debt. Income inequality. Income inequality has been a growing problem in the United States for many years. The rich are getting richer, while the poor are getting poorer. This has resulted in a significant wealth gap, which has contributed to social unrest and political polarization. The consequences of the current economic situation. A collapse in the stock market. The stock market is currently at an all-time high, but it is likely to collapse in the coming years. This would have a significant impact on the U.S. economy, as many businesses rely on the stock market for funding. An increase in unemployment. If the stock market collapses, many businesses would be forced to close, resulting in a significant increase in unemployment. This would put a strain on the U.S. economy and could lead to a recession. A decrease in consumer spending. If unemployment increases, many people would be forced to cut back on their spending. This would have a significant impact on the U.S. economy, as consumer spending accounts for around 70% of the GDP. A decrease in foreign investment. The United States has relied on foreign investment for many years, but if the national debt continues to increase, foreign investors may start to lose confidence in the U.S. economy. This could lead to a decrease in foreign investment, which would have a significant impact on the U.S. economy. The solutions to the current economic situation. To avoid the financial disaster that is likely to hit the United States in the upcoming years, several solutions need to be implemented. Reduce the national debt. The national debt needs to be reduced to a sustainable level. This can be achieved by reducing government spending, increasing taxes, or a combination of both. Address income inequality. Income inequality needs to be addressed to reduce social unrest and political polarization. This can be achieved by implementing policies that promote income redistribution and investing in education and job training programs. Increase foreign investment. To increase foreign investment, the United States needs to improve its trade deficit. This can be achieved by promoting exports and reducing imports. Invest in infrastructure. Investing in infrastructure can help create jobs and stimulate economic growth. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.